Ever wondered how secure your financial future really is? It's a question that keeps many of us up at night. The reality, though, is that financial security doesn't just happen. It requires planning, commitment, and yes, money. But where to start? Well, by investing wisely. Whether it's for retirement, education, a dream home, or even just a rainy day, smart investments can help you reach your financial goals. If these questions are haunting you, you're in the right place. We're about to explore the top 10 investment strategies. Firstly, never put all your eggs in one basket. This old adage holds true, especially when it comes to investing your hard-earned money. The concept is called diversification. Think of it as a financial jigsaw puzzle where each piece represents a different type of investment: stocks, bonds, real estate, you name it. The idea behind diversification is simple. It's about spreading your investments across various asset classes to balance risk and reward. This way, if one investment takes a nosedive, you won't lose everything. Your other investments can help offset the losses. For instance, when the stock market is down, bonds often perform well, and vice versa. So, having both in your portfolio can help maintain stability. Similarly, investing in different industries or geographic regions can further spread the risk. So, diversify. Mix it up. Keep your portfolio varied and vibrant. It's like a well-balanced diet for your finances, ensuring you're not overly reliant on one source. Remember, diversification reduces risk. Secondly, consider putting your money in stocks. The stock market is a bustling, dynamic entity, filled with potential and possibility. It's a place where companies, big and small, from all over the world, trade their shares. And these shares, they're not just pieces of paper. They represent a piece of ownership in a company. When you buy stocks, you're buying into the potential of a company. If the company does well, the value of your stocks rise. It's like riding in a hot air balloon that's fueled by the company's success. The higher the company soars, the higher you go. But remember, the stock market also has its downs, just like that hot air balloon when the fuel runs out. Investing in stocks is not without risks. The market can fluctuate wildly, and there's always the potential for loss. However, historically, investing in stocks has proven to provide some of the highest returns. Stocks can be volatile, but they also offer significant growth potential. Thirdly, real estate, an investment you can see and touch. This tangible asset class provides a unique allure that's hard to resist. Picture owning a piece of land or a building. It's a feeling of true ownership, isn't it? But like all investments, real estate has its pros and cons. On the bright side, it can generate rental income, a steady cash flow that puts money into your pocket every month. Plus, there's potential for appreciation as property values tend to increase over time. However, it's not all sunshine and rainbows. Real estate can be capital intensive and maintenance costs can add up. Plus, the market can be unpredictable, and liquidity can be a challenge if you need to sell quickly. But despite these drawbacks, the stability and the potential for both income and appreciation make real estate a compelling option for many investors. Real estate, a tangible asset that can provide steady income. Fourthly, have you considered peer-to-peer lending? Now you might think, lending? Isn't that a bank's job? Well, not necessarily. Peer-to-peer lending, or P2P as it's often abbreviated, is quite simply a method of debt financing where individuals can lend and borrow money without the use of an official financial institution. Imagine this: you're essentially acting as a mini bank. You lend money to individuals or small businesses in need, and they pay you back with interest. The beauty of this is, the interest rates are often higher than what you'd get from a traditional savings account. So your money works harder, and you get to play banker. But remember, with great power comes great responsibility. The risk here is that the borrower might default on their loan, so it's important to diversify your loans to mitigate this risk. Peer-to-peer lending, a modern way to invest. It could be your ticket to better financial returns. Let your money do the talking. Fifthly and sixthly, mutual funds and ETFs. Let the professionals do the work. Now, what's the magic behind mutual funds and exchange-traded funds, or ETFs? Simply put, they offer diversification and professional management. With mutual funds, your money is pooled with that of other investors and managed by financial professionals. They spread these funds across a variety of investments, which can include stocks, bonds, and other assets. This reduces risk and increases potential returns. It's like having your own team of financial wizards working for you. Now, ETFs are similar, but with a twist. They're traded on exchanges just like individual stocks. This gives you the flexibility to buy and sell throughout the day at fluctuating prices. They offer the same diversification benefits as mutual funds, but with the added bonus of greater flexibility. In the world of investing, there's strength in numbers. mutual funds and ETFs, a simple way to diversify your portfolio. 7th, investing in your own business, the investment you control. Now this one is for the go-getters out there, the dreamers and the doers. It's about channeling your passion, your skills, and your unique vision into something tangible and profitable. Think of it this way. You are the captain of your ship, navigating the waters of the market with a keen eye and a steady hand. You have the power to make decisions, to steer the course, and to set the sails for growth. You're not just buying a piece of a company like when investing in stocks. You're creating, nurturing, and expanding your own venture. The potential for growth? Immense. The satisfaction of seeing your brainchild flourish? Priceless. Yes, it's a risk, but isn't every great venture? And with risk comes reward. Remember, no one ever made a difference by playing it safe. Your own business, an investment where you call the shots. 8th, retirement accounts, the investment with tax advantages. Now let's talk about a method of investing that not only grows your wealth, but also helps keep the tax man at bay. Yes, you guessed it, we're talking about retirement accounts. These accounts, such as 401(k)s and IRAs, come with significant tax benefits that can help your money grow more efficiently over time. But there's more to the story than just tax benefits. Retirement accounts also allow your money to grow through compound interest. This is interest on top of interest, a snowball effect that can lead to substantial growth over time. To put it simply, the sooner you start investing in a retirement account, the more time your money has to grow. So, whether you're just starting out in your career or you're in the midst of it, don't delay in setting up your retirement account. Retirement accounts, a smart way to save for the future. 9th, commodities, a hedge against inflation. Now, you might be wondering, what exactly are commodities? Well, these are basic goods that can be interchanged with other goods of the same type. Think of gold, oil, or wheat. Investing in commodities has its unique advantages. For one, they can provide a high return on investment given their integral role in various industries. When economies boom, demand for these goods can skyrocket, leading to potential windfalls for investors. But it's not all sunshine and rainbows. Commodities can be volatile. Their prices can swing wildly based on supply and demand dynamics, geopolitical events, and even weather patterns. So it's essential to do your homework and understand the risks before diving in. One of the most compelling reasons to invest in commodities is their ability to act as a hedge against inflation. When inflation rises, the price of commodities typically increases too, protecting your investment's purchasing power. Commodities, an investment that can shine in times of inflation. Lastly, investing in education, an investment in yourself. In the ever-evolving world of finance, staying ahead means continuous learning. It's like sharpening your tool set, and in this case, your mind is your most valuable tool. Whether it's a new degree, a certification course, or a webinar, every bit of knowledge can unlock doors to higher income potential. Remember, the more you learn, the more you earn. Investing in education, an investment that never depreciates. Well, that's going to be it for today, folks. Thanks for watching. We hope to see you next time. Stay safe, everyone.